Hey folks, doing a sound check. Give me some feedback here. Welcome wherever you are. Awesome. It'll be just a few minutes, folks. So we'll let the room fill up. Running a little late this morning, but we'll be ready to go here in a couple minutes. I'm going to put up a live screen. You guys can watch the E-minis trade, and then I will be back up here in just a minute. Just another minute or so, folks. Be right with you. Hang in there. Welcome everyone. Sorry about the little late start here, but yeah, I felt like I was trying to catch a plane this morning. Anyway, yeah, I see some great comments on the timeline here, and we'll be going through a lot of details. And one of the questions that are obviously coming up with everyone is, where does this all end? Where's the top? It's funny because last night, I always watch our video performance we put out, and this video is off because I said there's no top. If I put a thumbnail out and says top signaled, I'd probably get 100,000 views. That's what everybody's waiting for, and that's why it's not happening. And just as you folks were watching the E-mini trade here on the screen, we were printing new highs, all-time new highs, as in a real-time mode. And just while I'm going ahead and talk, just let me know that the sound is still okay. I had to move the mic a little bit, but just let me know that's still legit. And so this is one of these situations that we've never been through before, but we have been through before. And I've seen these type of rallies before. I've talked about it. Unfortunately, I have this event that I experienced way back in 1980 with sugar. I was trying to find some old sugar charts. I haven't found the one I was looking for, but it doesn't matter what the commodity is. It doesn't matter whether it's a stock market index. When these things are going like this, there's no way to determine where they're going to end. Now, there is a way, which I will cover the second I see it. There is a way to see when it ended, but you're not going to predict it ahead of time. You're not going to go this price and this day and all the cycle guys, all this stuff. Nothing's going to work out that way. And what we're going to happen, if you went back, I think it was maybe a video I did on the 24th of March or the 25th of March, I proclaimed that that was the low. That 2190 number was the low. And the reason why I was able to say that at that point in time is because of the price action. We've not seen that climactic move yet. And in fact, volume is so low right now, we're still not at, this thing could grind for a while. And I'll go through all the details here in a few minutes. And I think it's important to understand that what's going on right now is while this market's went up, there's a lot of shorts out there. And I address these things on my daily videos that, there's people think that Tesla and Apple are running the market. Well, Apple's down today and the market's making an all-time new high. So we're starting to see rotation. I've talked about, I go through our database every night. We're seeing intermediate rotation. The short-term rotation is, as I've been talking about, and I'll go through details, but I just want to summarize what I'm seeing right now because there seems to be a lot of questions around this. As what we're seeing is just what feels to be a euphoria, and another way really isn't, as far as volume and other metrics. They're not going. Now, I have a completely different view on volume than most people. I don't use volume as analysis, but I do watch it when we see an absolute peak. If volume were to surge and just go crazy, and let's say we went to 3,600 plus and volume just went through the roof, I would be willing to say that was probably the high. It's almost like a capitulation versus some folks look at high volume, that tells you we're going to see more. I don't see it that way. If you look at the lows, we'll look at it here in a few minutes since we're getting on this whole volume dialogue that we're talking about here. We'll take a look at it here in a few minutes. And, we've seen not just prices surge, but we've seen a normalization of market action. I'm looking at this level 2 here on the E-minis. There's still a little lean relative to where we were, let's say pre-February. The bid ask used to be about 200 by 300 on the E-minis. It's now 100 by 100, maybe 150 by 250. So, but that's really good volume. When things were crazy and we were getting 100 handled days, as far as a range, 100 point moves in the S&P, these numbers were 3 and 5 on a bid ask. There was no liquidity. There was absolute running on an air pocket, and that's why we saw these monster volatility, because there was no liquidity, and the price discovery was just about impossible. Price discovery has actually been pretty good, and as I continue to argue, is if you look at our database, and we will here in a few minutes, is we've got 11,000 symbols that are participating in this rally. It's not Apple and the fangs and all that stuff. That's all you hear on the news, is those are headline stocks, but there are a lot of stocks that are moving big time. There's some amazing moves going on, some small caps and the mid cap stocks. There's definitely opportunities there. And I'm going to try to address some of these things today, and working on trying to find some metrics that were to find some of these stocks. We are in the process right now. Matter of fact, I got the file this morning. Haven't had a chance to review it yet, but we're starting back our old screening service that we have. And I was hoping to have it by yesterday, as timing would be for the WaveTech training. But this is going to be significant, because we're going to have some screens that I'll go through this when we get it together. In fact, I'll probably just do a video on the screening service and how to use it and how to find ideas from a fundamental viewpoints. And yes, there are fundamentals. There are definitely fundamentals. They're not just all the stay at home, work at home stocks, the Zooms and the Apples and all the tech stocks. There's some significant things going on here today. And so we'll try to cover a large spectrum, as I always do on these videos, and have somewhat of a hard stop shortly after the close today. So we'll go to the close and hang out. I really enjoy these things, and we'll dig into your stocks and things that that you're looking at that you folks want to talk about. We'll try to get through as much as we can, and yeah, I just saw a comment on the chat line, and it's interesting, because we used to have a saying on trading floor, but it's not just the trading floor, but it's where I picked it up at, is it works until it doesn't, right? And this thing works until it doesn't. And like I said, there's no way to determine a price top. And I showed you folks several videos ago. I showed you the calculations that I did for the projections back on April 30th, and I came up with 35.15, 35.70. We're still trading at that target range right as we speak. We're coming right into that extreme target that I was able to identify back in April. And I remember it was funny, because I did that video. I worked really hard, and I thought, oh, this is a great video. And I think the actual views on that video initially were really not very good, and I think we're probably getting 10, 12,000 a day, and we got like 5,000. We got half. Why? Because it was positive. And so folks, it tells me a lot. I look at the view ratios, things, looking at the thumbnails and all those type of things. And there's something to be said there. And I love this channel that we've created, by the way. I love this community. I love all your comments, and it does give me some insight into basically doing my own surveys of what I think is going on. So it's been really positive from my viewpoint. And we're going to go through. I think I've got a couple things here I will bring up once I go off screen here and we start to dig into some technicals. But I think there's still a lot on this market on the upside. And I'll go through the monthly market grid here and all that stuff. And I'm just going to reach out. Yeah, so somebody's asking why the VIX is going up. The VIX is a hedge. People are buying the VIX for a hedge, for exactly that. And I talked about that. It is going to go up, and it's a fear index, right? So the VIX is going up while the market's going up. Usually that's not how it works, right? We should be printing way down, you know, maybe a 18 handle or something in the VIX. But yeah, so that's just a hedge, you know. And it's interesting, you know, I think calls that I've made in the metals the last several over the last week or so, we're continuing just to follow through with all this stuff. So I'm going to do my very best. I know I got about a 10-minute late start here today. I'm going to do my very best to kind of rip through a lot of this stuff and cover, and then ultimately get into what I know you folks really wanted me to cover, some individual stocks and go into this. But I usually will go into, you know, kind of a rant on what I don't get to talk to you about on the 12-minute videos. You know, I saw somebody mention that I don't talk about the big picture things that are affecting markets. I just kind of remind everybody, the videos I do are daily commentary, expectations for the next very short-term viewpoint. And then when there is a long-term viewpoint, I will do a video on that. But for right now, it's step by step, right? Just one day at a time. You monitor it. You have to watch the action. When I see a switch, it was funny. I was waking up this morning and I was thinking about, you know, I can't wait for the day that I get a sell signal, you know, and I can go, market signals a sell, you know, and I'm anxious for that. But it's not going to be any. It doesn't appear that it will be anytime soon at all. So, okay, let's go ahead and let's start digging into some of the technicals. I'm just looking at the of the line and the chat line just to see what's going on. So let's go ahead and go full screen and let's start to talk a bit about what's going on. And I discussed this last night, and let's bring up the market grid here. And this is a weekly S&P. I discussed this in detail last night. The high-end target, R3, 35.59, we've exceeded that now. And our XT, or the extreme projected for this week, it's midday Wednesday, right? So we're 35.75.62 is the RXT there, and that is you know, we could easily print that. That's only another 9 handles from where we're setting right now. So this grid, there's a couple things that happened, and I mentioned this a little bit on Monday. Last week, we did get a close above the RXT number, 34.55, close 35.08. Typically, we'll get some sideways. So there is, just from that signal, and it's reasonably reliable. It's about 70% accurate from the standpoint of signaling a sideways move. And now this is a weekly graph, so that would tell us that we can still print up. Maybe we're going to get a reversal if you know, the ADP numbers came in not so good. And this goes, I'm going to try to tie together a lot of stuff here, and I think it's I just want to come back on screen because this is a lot of stuff starting. When I start these things, it just kind of opens up. So one of the things that I talked about on last week's videos and talking about the Fed and the whole symposium situation, what I saw then was that these guys are going, I put it out there, they're going to pump the market. Well, one of the things I mentioned, because unemployment numbers are coming out this week, we saw a miss on the ADP numbers. Maybe, just maybe, there's going to be a miss on the employment numbers on Friday, and maybe it's going to be a really ugly number. And I've been setting this up for you folks on the daily videos. I've been talking that September, October metrics aren't going to look as rosy as the previous, as the reports that we got out in August and July and all that stuff. It's just not going to be the same. And what we're really going to see here is a very choppy, a different look on the economy, and maybe this unemployment number misses. And that sounds like it's potentially negative, but I'm also mentioning something else. It's a long weekend coming up, and I believe the Fed, you know, I'm an old dude, right? I started in the markets literally 3 months before Paul Volcker came in into the Fed. And the first thing Volcker did is Jimmy Carter appointed him. He came in, it was the final 3-4 months of Carter's administration. He came in and shock and all, he was going to kill inflation. He didn't care. We were in a recession, and this guy raises rates in a recession. Who the hell does that, right? Nobody expected it, but he was hell-bent on killing inflation. And the primary tool he used, and Greenspan, it tends that when we look at the Feds, that there seems to be new eras that start, and there was the Volcker era, and then when Reagan put in Greenspan, he continued a lot of those type of policies that Volcker was doing. And Volcker was very aggressive. He was a huge guy. It was like 6'8" or something. He was a big guy. You know, he took command in the room when he came into those Fed meetings. But what he did, and this is important for what I believe we're going to be dealing with going forward. And I heard a lot of things from Jay Powell the other day, and what they're telling us, what Jay Powell was telling us, is there's a new era. This is what Bernanke and Yellen did. So let's go back. Volcker, Greenspan had a tactic, and their tactic was kind of shock and awe. Let's surprise the markets when they're closed. Let's do things they don't expect us to do. And they listen to the street rhetoric, and they do something even more aggressive or something completely opposite of what they normally do. So we go to Yellen, or we go to Bernanke, Helicopter Ben, and then I used to, this isn't condescending, so don't call me out. I used to call Grandma Yellen. And, you know, it was a kinder and gentler Fed. We're going to tell you what's going on. We don't want to scare anybody. We just want to have full transparency. And that continued all the way into even Powell. And now all of a sudden they see something. And I'm a long way to get to my point here. But the point is that what they see is that kind of tactic is not going to work in this environment. If everybody thinks they know what's going on, that's part of what we're seeing here, which they do know, but they have to be able to take actions that market participants and the so-called smart money doesn't think they will do, and they have to do it also in between meetings and different tactics. We'll see if I'm right, but what I heard from Powell was what we used to do, we can't do anymore. And we're changing the policy. We're going to change the metrics. We're going to change up a lot of stuff. And I think that is the one tactic. If we know there's a Fed meeting 3 weeks from now and they're fully transparent, we're going to know exactly what to expect from these people. And so therefore, the impact of any action they take was already anticipated, built in the market. You know the story. So now what they have to do is they have to be super quiet, and then they just have to come in and shock and awe and drop money bombs on the markets when they don't expect them. You know, and I've talked a lot about this. You know, it just looks like between the White House and the House and Congress, these people can't. I mean, could you imagine if you had to run a company like these guys run our country, and everybody's got such an agenda, whether it be right or wrong? I'm not picking sides here, but it's like no one can see what's really necessary. They all have their agenda. And so we need that fiscal part of things. And I've talked a lot about this. So the Fed is going, I think the Fed's going to take the lead because they don't have all this crap to go through and to put up with. What they get to do is they get to make their own decisions, and that there is an independence. You can call out all day long, Trump is controlling the Fed, and every president has an influence on the Fed, no matter who they've been. But that's not what I'm talking about here. I'm talking about the Fed will take the move, and I think there's another big chunk of money. If they start to see some of the things that I'm expecting, I don't know anything, right? I do actually have a crystal ball. I have a crystal ball on my table over there. It doesn't work very well. I've tried it. But the bottom line is what they're going to have to take to move the markets in a direction and have a full effect. They're going to have to do some of these things I'm talking about and have an absolute surprise element to the markets, or otherwise, they're not going to be able to authenticate any of their strategies. So if I'm still getting to the point, if the employment numbers come out bad, we could see some sort of action, maybe a chunk of money, new QE, some new program, something new. And this is going to force the hand. I keep telling everybody this. This is going to force the hand of the fiscal side or the government side of stimulus to get off their ass and do something. I think the Fed is truly going to lead this thing forward. And I think it's not just the Fed. I think it's also the just everybody as far as that goes. It's the European governments. Everybody's kind of in this stalemate, waiting this. I think it's a wait and see game, and the Fed's going to be. They were the first player to start with. They were the ones that put in QE, lowered interest rates to zero in March, and they made all those moves. And after that, you saw just boom, no problem. Got a deal, got stimulus, got PPP, you got all the stuff. And anyway, so just kind of going on my typical rants here as far as what's going on in the markets. But the Fed, I believe, will add some money. And if numbers come in terrible, let's say it's a terrible miss on Friday, then we might see something over a long weekend. This is stuff you wouldn't believe if you went back. And somebody certainly must have written a book, or there must be some archive somewhere. I just experienced it, but they used to do some crazy things. That they Greenspan and Volcker, some crazy stuff on the weekends. You would come in on Monday morning, and they would disrupt the markets big time. And back in those days, it wasn't the equity markets that were in focus, it was the interest rates. You have to remember, at 1980, the long bond printed 16.75%, and the Fed funds that are zero basically right now were at 20%. They were actually 16 plus a penalty, what they called, if you went to the discount window too often, the discount rate had a surcharge of 4% if you were abusing the window and borrowing too much money. It's funny, you needed money for your bank and they penalized you for getting that money. So I think we're in a much different situation, but we're in a similar one in that the Fed has to be able to maintain control and to do these things. Okay, I think I got that out of me. But this is important, because when somebody asks, where does this thing end? This is why I said not right now. This thing has got a long ways to go. The markets have got a long ways to go yet. I've been going on and on. I've been going on and on about the, about this leadership change and all that stuff. But let's go to volume, because we'll go to volume and we'll look at the VIX here real quick. I need to put a get a volume chart that has the market on, but I just want to. This is just volume, and what this is weekly volume. So this little hump right here. Let me draw in a few things here so we make sure we're all looking at the same thing. So this spike right here, I'll box this out. This was March period, March, April, May. We saw a spike in up to about 8 million shares a day. We saw another spike here, and this was right, this started, I think, in the June 9th high, and that volatility range that we saw the volume go up pretty substantially during this period of time. And then we saw it collapse, and then I will even argue that it's somewhat normalized around this 4 billion shares a day, and we're still hanging in that range. Now today it looks like we might be a little higher. You see over here it's at 3.6, and we're 2 hours out. That this might be a little bit of a spike in volume today. So we may start to see the things I was talking about a few minutes ago, is we may start to see maybe some climactic type action, and that's what I'm watching for. So everything I said just now is subject to change in a heartbeat. And people try to lock me into oh, he said 3 days ago it was going to do this, now he's saying this. Yeah, I'm a trader. I'm going to follow these markets and tell you what's going to happen. So I'm looking for the turnaround, but it's not there yet. But these are things that would tell us something about the something about the potential for a climactic type run here, and then it would set up maybe a short-term high. The intermediate charts are way too strong. They're not going to roll over here, but that doesn't mean we can't see a correction 3, 4, 5% even, and still being within the context of a larger decline. But this volume is, when you see those spikes, if we went to this date, let me just put this up. So that's 626. That was the end of the, let me just look at the first spike. First spike, 529, 65, yeah, 6569. We were printing up at 8, almost 9. I think one day I was just short. Looks like it was at, this big volume day was 12 billion shares. That's insane, right? And if we look at, let's take a look at that. That was on 626. So we'll go over to the S&P cash. $626 was right on the 10-week moving average. It closed terribly, closed on the low of the week, and it's been straight up since that moment. So that was a very climactic type situation, and that's exactly what what I guess what it needed to make that turnaround and start to see this acceleration that has pushed us to new highs. I'm going to go over to a monthly, since we're on the S&P here. The monthly market grid has contracted substantially, and I want you to look at the numbers, and this is for what you're seeing on the screen here is for the month of September, okay? R1, 35.53. Look at the screen, we're 35.65. We printed above R1 monthly. R2, 36.13 and 36.72. So those are the likely next range that we will move into should this thing continue. Maybe it's because of another Fed stimulus. Maybe we get the this terrible number that I talked about on the, we get a terrible number that I talked about as far as the employment numbers coming out on Friday, and then we get maybe a little hesitation, and the Fed comes in and announces some new magical program. I don't know that that's going to happen, but those are the kind of things that are going to keep this market going, moving substantially higher. But these numbers here on the market grid, so we're already through 53. Next stop, 3613. That's only 40 handles. And one of the things that happens from here, that's only 1%. It's not even a big deal to get there. So because of the numbers are so big, a 1% move is just absolutely nothing. It's going to move. It's nothing from the standpoint of 1%, but the numbers are getting bigger and bigger because of the price that we're at. So is it possible we could print all the way to RXT by the end of September? It certainly is. We're looking at, I talked about this, I believe, on Tuesday night's video, that R2, R3 is most likely the target range for the month of September. Unless we see some massively big reversal, black swan, something that we didn't know was coming, comes in and crushes the market, nothing's going to happen. But the most likely scenario will be probably minimum R2, and at that stage, maybe we can evaluate all the things I'm telling you. These are things that I tell you what I love about these live streams is it gives me the opportunity to do a lot of research. So you're just working with me, and I'm sharing my thoughts as I do my research and start to look at some things that could be relevant as we go forward. So I would say you could quote me R1, R2. I'm sorry, R2, R3 is going to be the target range for September, and maybe it will continue beyond that, but I don't think for this month. Those are pretty lofty numbers. Let's take a quick look at the NASDAQ futures on the same level, and those numbers on a monthly basis suggest that we could see we're already trading right now. The high is 12,465. We got R1 on a monthly 12,368, so we're above that. The next number, R2, R3 on the NASDAQ is 12,652, 12,936. So and the extreme is 13,000. I remember just a few weeks ago, I was being called crazy that I thought that the NASDAQ was going to 11,000. That seemed to surprise, or I guess I brought the trolls out on that. Yeah, so yeah, somebody's making a comment since I went on a big red rant about the Fed, but $4 trillion in debt added this year. I think my good friend Hugh Hendry made a comment, something about this whole situation, that we're all turning Japanese, is something he said at a conference that he spoke at. I still need to release those tapes. I think you would find them interesting. But we're, if you look at debt to GDP relative to Japan, we got a long ways to go. We could increase it another 20 trillion, 30 trillion before we even get to worry about it. So yeah, we'll just see how this all plays out. I don't think the debt is going to be an issue. It certainly was an issue in Venezuela, okay, but it's probably not the same issue that it is here. And it's still, yeah, it's big numbers. And those that work for me and around me know I always talk about we live in a world of big numbers, and these are really big numbers. and they seem really big, and they are, but on a relative basis, they're not material. I just remember, I've been doing this a long time, and coming out of '09, this was the same story out of '09, that somehow we were going to get this big douse of inflation and all of that, and we never got it. And the debt was supposed to crush us, and I remember I probably even uttered these words, is that we're fixing a debt crisis with debt. Well, guess what? They did. They fixed it. And somehow it's all manageable. So debt is not, let me make a statement. This is worth, so I want to come on screen. Debt is not an issue at all. Can you maintain it? Can you pay for debt? Is it manageable? If it's manageable, it's not a problem. That's why people get mortgages and they borrow money. But if the cash flow gets disrupted, like what we saw, then, and you happen to be a government and you have the Federal Reserve that probably one of the funniest comments I saw, but it's actually true. And I saw a clip of Ben Bernanke talking about just this. As somebody said, how did the Fed create, $4 trillion? Open spreadsheet, add zeros, hit save, close spreadsheet, done. They create this money out of thin air. So some of this stuff, yeah, it is debt, and as long as rates are zero, it works. All of that stuff. So it's really isn't manageable. It's not how much can you manage it, and if it continue, it's one of those things again. Like I said earlier, it works until it doesn't. And if it doesn't work, it doesn't work, right? It stops working. It's like my watch, right? It works if it runs out, but it's one of those motions. So it's almost a perpetual machine, right? But all of this debt is a big issue, but if it can be managed and maintained, and governments, by the way, have never paid off their debt. They always carry some debt. And the numbers that we're seeing today are just hard to believe. So I get where all that dialogue comes from, but that's not that. The thing that will roll this market over will not be something we know. It'll be something we don't know, or something that wasn't looked at. Everybody knows about the debt. Everybody knows about all of these elements. That won't be the issue. Although I would tell you, in 1987, on September 16th, I remember it like yesterday, I was writing newsletters. Yes, even back in 1987, I was an analyst for a major regional firm, and I wrote a newsletter that the risk reward to owning stocks was zero. Get out of the markets, in September 16th of 1987. Of course, it was a couple of weeks. I wasn't predicting a crash. I just didn't see the value in the markets anymore. And that's not the case right now. There's a whole level of rotation to happen before this market will hit a high. And it won't be debt and all the things that we're talking about here that will roll this market. It will be something else. I don't know what, but barring some beginning of a major war or a conflict, in the South China Sea, and everybody gets crazy there. Other than that, you're not going to see this. Everybody wants to coexist, believe it or not. Even China, they just want to own everything, and I get that. That's how those type of regimes think and work, and billions of people isn't good enough. They want more. So, okay, let's go back to the charts here. Yeah, so that's the NASDAQ. Let's take a look. Let's go to this is monthly 10-year, but let me go to let's talk about interest rates. And then we're also, from interest rates, we're going to go to the dollar as well. And then I'm getting pretty close to start opening things up. I like to go on for around the first hour or so and talk about a lot of these things that are seemingly important. So the interest rates are very interesting from the standpoint of this pattern is setting up, and I still think they're bottoming here. We did manage to print up to the 0.7479. I think we hit on the peak. I think this day here was 79. Yeah, it was 746 on that peak. We're going to continue between 0.64, 0.74, call it 65 to 0.75, and we are still experiencing a lot of downside pressure, but the underlying trend is right here at 637. The PPM2 is at a plus 0.98. There's less than a 20% probability for the market to decline and stay under that level here. Let me just so we're looking at 656. This is daily. This is going to be major support, 656, 627. That's going to be the bottom end of this. So we'll continue to grind sideways. And we go to the weekly, you start to see we had a big reversal last week. And unless we close above 7.3 on Friday, then we're just signaling more sideways. So we're just going to continue to see, most likely what this is signaling is we're going to see more sideways movement in the 10-year. There's not going to be any big increase other than we're range bound on this. And if we just look at the grid, on a weekly basis, the grid is extreme 0.53 on the downside, 0.74, call it 0.75 on the upside. And most likely this is the worst case on this week is S1, and we've seen the high of 746. So we basically saw an RXT high for the week, and now we're printing down toward S1. And how it closes will be important. Maybe we will rebound. And all I would want to see from this standpoint is that if we get back above 657, but this market's not going anywhere. This is a manipulated and controlled market, to say the least. We're going to look at the yield curve for a second here. And the yield curve has also continued to steepen until the last couple of days, and we've seen it flatten out, but we definitely have an uptrend on the spread, and we're going to probably just consolidate in there. But the Fed is targeting the yield curve. They're very interested in, this is one of their biggest interests. This is the 1030s. They want these things to float higher. They're going to maintain that against the short-term zero rates. And even I think the 2.5s are interesting looking as well. This is this chart here. The 2.5s have been in that uptrend too, and just the last couple of days we've seen them start to flatten just a little bit. But these spreads are important to understand from the structure of how the banking system's operating and how a lot of debt is being managed from that standpoint. So these are the things that the big banks watch very closely. And for about 8 years, that was my job. I had a consulting service, that was worked with just the banks, working with spread trading, working with managing risk and managing mortgage risk and their risk on the book. Okay, so let's go to the dollar. So here's what we'll do, and then I'll open up to questions. I'm going to run through some ideas on the dollar. We'll look at we'll just see what comes up there. From the dollar, we'll go to gold and then silver, and then I think we're going to open up and we'll start doing individual stocks. I'll probably just hit Tesla, Apple, and then I'll let you guys don't give me symbols yet, because you'll blow up the timeline. I'll ask you for when it's ready to go. Okay. So let's put the dollar index up. Now this is a weekly graph, and I've talked about this a lot. This thing drifted into the 92 handle. I thought we would hold around 93, but I still see this general pattern that we're setting up here as a bottoming pattern. There's still a lot of downward pressure. We're looking at the PPMs. We're minus 49, minus 32, minus 14. So if you haven't watched this channel before and I talk about these PPMs, these are the price pressure momentum indicators. Are proprietary indicators. They're not on the internet anywhere, just here. And what they do is they measure the angle of attack of the moving averages. So most people look at moving averages and go, oh, here's the moving average and it should hold there. Well, this tells us whether it's going to hold or not, and whether it's going to break through these. And there is a video on my channel that you can watch about the PPMs. I think it does a fairly good job. Probably deserves some more input. I guess it deserves another advanced video, since we've got so many, so many people watching the channel now. But this pattern that's setting up is very important from a longer term or intermediate term basis, and we're going to see this set up. So I saw a comment on the line that the dollar's hurting their gold position, and yeah, and I've been talking about that. In fact, gold printed down to some of the extremes that I talked about in last night's video. So if you're just tuning into this live stream, watch the videos on the channel, and you'll see there's a lot of cover. I usually cover gold every night. Last night I did gold and silver, and that'll be that will be interesting to you if you're trading any of the metals. Pretty accurate calls from the standpoint, because it's actually from time to time, and more times than not, a lot of this analysis that you see here, markets will adhere within this market grids on these weekly basis, all that. So we're looking, let's speaking of the market grid, let's look at the dollar market grid. This is the weekly, and what we're seeing here is right now we had a high of 92.87. R2 is 92.95. S1, let's see, we got down to S2 basically, which was 91.75. Bounced off of that. Now we're just about printing an R2. So we had an S2 R2 number for the week. And this, if we can close at least above the S2 number on, I'm sorry, we can close above R1 on Friday, that's going to be positive. It's also going to set up a reversal pattern, and we'll start to see the dollar move up, but there's plenty of overhead resistance. So there's no bull market coming in the dollar. All we're talking about here is a stabilization of the dollar, not a bull market. So we've got resistance around 90, 94. It's going to be around 93.5 over the next couple of weeks. So there's a limitation of how far this market's going to go. But over the next 4 to 6 weeks, depending on the pattern it sets up, my expectation is we'll see a lower level consolidation, possibly setting up, bleeding off some of this downward momentum there is, and then the market will be able to rally above the 93.5, maybe 94.5 at that stage. Nothing else from that standpoint. Okay, so let's go ahead and let's move on, and let's go to gold. And here's some of the numbers. I talked about these numbers last night. 1945 was S1 weekly. I thought we would see a retracement down toward this level. It's funny, if you watch the channel, you'll see me mention numbers, and I think they're 2, 3, 5 days off, and it's literally the next day these things get hit. Just volatility levels in gold right now are reasonably high. And we're also seeing some things. This is a weekly. We're seeing the first derivative. Let me point out some of this stuff. So I know a lot of you are trading gold. I see a lot of stuff on the channel about it. So let's take a look and dig into this just a little bit. You'll see right here the PPM1 is cutting through that first derivative number. Not a good sign, okay? We've cut through first and second derivatives on PPM2, and PPM3 is probably going to hold that. This is likely to kind of keep this going here. This is what I would expect to see as far as the indicator goes. The PPM, we probably see values down in this level, but we're going to stay well above zero. And on the PPMs, in case you're not a regular watcher, anything over 0.25 is a trend. So we're going to maintain a trend level on the gold on the upside on an intermediate level. We're not looking at any major shifts in the trend, but we are looking at potentially broadening the trading range. Now, the extreme, and I talked about this last night, I mentioned 1925, that number you'll see over here, basically a 10-week moving average. And I'll point out a couple of things. Now, if we drop below 0.35, somewhere over here, if this indicator goes below that level, all of a sudden that 10-period moving average is going to be vulnerable to a penetration. As it stands right now, there's only a 20% probability for the market to go through the 1923 level. And if we continue to see weakness as we go into the rest of the week, then that 20, 23, 25 level, down in that level, should hold. Now, last week we got a really nice reversal off of that 10-week moving average. You'll see it. I'll just draw this in. I'm getting a lot of arrows here, but right there we got a reversal pattern. We would have to close. Let me clean this up. We'd have to close above 1974 on Friday to confirm that reversal. Probably not going to happen. I've been talking about this for a while, is that what we're really going to see here is a consolidation that will continue to consolidate within the range of this weekly market grid. This will be the primary range that we're going to stay in. You see the grid is stabilized here and it's squared off. I talk a lot about this. So the extremes down in the 1800 handle are possible, but that 10-period moving average will be the likely bottom of this. But we're just going to stay in a range, should maintain an upward bias, and it's going to be, I'm drawing in this last arrow I'm putting in would be projection for the 10-week moving average. It's not going to roll over easy, especially at a point at this. It's actually just downtick to 0.7. It's 0.77. So that is, we're still seeing some weakness. Did we get a price change here? Hang on. Let me clean this up. When I use this tool, it freezes the screen. So let me look at something. Yeah, so now we're 0.77, and we are still trading down at that 46 level with a 38 low. But that's what's likely going to happen. When we look at the daily, and we'll finish here and we'll move on to silver. But we look at the daily, we're trading right at that 1941 number. We traded through it. Talked about this last night. PPM3 is failing here, which suggests that there is vulnerability for it to go through. The probabilities right now for it to trade through this level, which it already has, is 60%. So if would have done this live stream earlier today, this was probably already indicated. I didn't look at this market. Didn't look at it earlier to see what the PPMs had done off the open, but these are updating real time as we're watching them. So this is definitely a gold's in a vulnerable phase of printing down toward those numbers I just talked about on the weekly 23, 25 level. Yeah, somebody asked, is that only a trade station? Yes, and we're trying to finalize some things with getting an indicator suite on the App Store on TradeStation, not the App Store on Apple, but on TradeStation. We're working on getting that completed, and I was still have hopes that it'd be this week, but we probably won't announce it until next week. So let's go to silver. So silver's blowing through its extreme level, 27.57, 27.27 is the low, and it could be heading for its 40-day moving average. We're seeing everything roll over. There's still some decent upside momentum on PPM2, but it's failing. So we're likely to continue to move down to 20, probably close to the 25 handle on this. It's not. We'll look at the weekly. This will give us a better view of this. And I did discuss these numbers in last night's video. So if you want to see the laboratory version of this commentary, you can go and watch last night's video and see exactly what's going on there. But let's go ahead and go to the weekly because there's not a lot here. The weekly grid, there's two things that are going to be important on silver for this week. And it's possible that we could end up, if this thing comes apart, of taking out last week's low. Last week's low was 26.29. Right now we have a 27.27 low, and R1 or S1 is 26.96. So I would expect we'll hold around there. If we take out that number, then there's a huge volatility possibility. We could spike all the way down to 26. I don't think we'll see the 25.10 level that's on S3, but we easily could see S2 on this thing. The silver has probably about 3 times the level of volatility that gold has. And that's an estimate, not an absolute. But it's the value. You can see we're down almost 4% here, and gold's down 1.6, so it's probably a 3-time volatility level as far as that goes. All right, so we've done that. Let's go ahead and let's start moving into some individual stocks. And what else? But let me go to daily Apple. We'll start with Apple. I'm going to do Apple, Tesla. All right. I'm going to before I do that, I'm going to ask you folks for some symbols that you would like me to cover. Now here we go. Yeah. Oh yeah, I got to do Zoom, right? Wow. Ask and you shall receive. Oh boy. You guys are blowing it up. All right, slow down for a minute. You didn't get a request in, stop. I'm going to lose everything on this line here. 1 second. Okay. Got quite a few to go through, so this will keep me busy for a little bit. And I'll give you guys a shot at, if I didn't cover what you're asking for, that you can get through that. Ask for some more. And by the way, I can't see this stuff, but if you haven't smashed that good old like button, you're enjoying these shows, make sure you do. And make sure you subscribe to the channel. That's important as well. Okay, let's dig in. So we'll start with Apple here. It's on the screen. I've got quite a few, and this will keep me busy. And I'm actually making a couple of requests to myself. And what I'm going to do, since we're live in the show and the markets are live, before I go to Apple, I just want to take a quick look at just what these indexes are doing now. We're now printing through the RXT number on the daily. 35.53.27 was that number. We're high 35.68. This thing's kind of in a runaway here. PPM's accelerating even more. So that's pretty impressive. Let me just pop over to this day trading screen real quick. Yeah, so, okay. Just want to see what it looked like. So we're continuing to go to this this crazy run up that we're seeing. And now this is in spite, one of the things I didn't talk about, I may revert back. I'm going to go through the stocks, but this capacity trade I keep bringing up, and crude oil got crushed today, and this was after I think that oil supplies drew down like 6.33, but everybody's saying it's because of the hurricane. So, and that probably makes sense. And so, okay, let's go ahead. Apple did something interesting yesterday. This is that market grid signal that I talked to you folks a lot about. RXT yesterday, 132.55, closed 134.18, closed above it, signals 2 to 3 days sideways to down. We've actually traded all the way through. If we look at today's action, the range has been 137.98, which was RXT, and now we're trading 130, but we printed 127. So we blew out the entire projected volatility range of Apple. Just blew it up. We took out RXT, and then we took out the STX, which is the extreme low. So pretty crazy. But that signal that came out yesterday actually set this up. So we should see at least another day or two. And when the market grid updates for tomorrow, we should see this thing start to slightly roll over like we did. If you can see where my cursor is, let me just draw this in. I'm not sure how well you folks can see this on your side, especially if you're on a mobile device. It gets pretty small. But last time we did that here, we got we got that little downslope. Now we did it again here, so we're likely to get just a little downslope here, but there's other things going on, and this is going to be interesting to watch. I talk to you folks about this all the time, and this one's not as clean, but we'll draw it up here. I always talk about I'm just going to draw on these arrows. I'll explain what I'm drawing here. So on these indicators, what you normally will get is that the momentum precedes price. So we get this ramp up of momentum on these indicators that I drew the up arrow. So right here, it ramps up, and we do it on 3 different levels, and then price action will precede that momentum, and then we get into this sideways maintenance mode. Okay, I'm gonna take this off. I want to move this out of the way. I'll show you exactly. Let me show you this, because this is an important concept, and this will carry through just so you can visually see this stuff when I'm talking about it, so you understand what we're doing here. And then when you look at any of the graphs I'm doing, daily commentary or whatever I'm doing, you'll have a better grasp of being able to see this stuff come up. So here's the example. This is the ramp up in the first off of the March lows, and just drawing these peaks in where they came in roughly. They come in at different levels. They're different lengths of signals or lengths of moving averages. So this first ppm1 tracks a 10-day moving average, simple, not weighted. ppm2 tracks the 21. ppm3 down here tracks the 40. So what you get is exactly what I was just talking about. You get this boost in momentum, it fades, and then you go sideways into maintenance mode. So there's an argument here that from this standpoint, we're still in that sideways maintenance mode, even though we peaked out. But there's a secondary push, and it also looks like we made a slightly higher high on these next momentum layers. I know it's not really super accurate, but you get what I'm talking about here. So when this happens, typically you set this up. That's a new surge. This is a new momentum reset. So I look at it, think about a half pipe, and you take a ball in a half pipe, and you put it up on the edge, and you let it go. And every time it goes to each side of the half pipe, it loses a little bit of momentum. It bleeds off, and then it ultimately stops. But what happens in the markets is it resets. So we got a reset. We pushed the momentum all the way back up, and now we're starting to see that fade of the momentum that happens. So we boosted momentum, which all came in on this last surge in prices. This one's not as clean, but you get the point. This uptrend that we're in along these moving averages, this whole thing is set up, and even though we're seeing this volatility here, what it really is setting up is not possibly a major top, but it's actually going to set up a broad trading range. And think about this, if you get stabilization in an Apple that's 7.3% of just that one stock of the S&P index, and it stabilizes, and other stocks start to roll in. That's what we're seeing today, actually, that Apple isn't leading the market. It's actually lagging the market for today, and other stocks are starting to come in to the rotation. And this is the type of thing you see, and to go forward from here, and this is what I've been talking about on the channel for literally weeks, is that you're going to see a secondary rotation in these stocks. So you can't just look at these stocks, the Apples and the Teslas, which we'll go through next, and just start calling a top because Apple's topping out. All Apple has to do is have a high level consolidation. And we'll look at the weekly graph here in a second. But I want you to understand these momentum concepts that I'm talking about here. And these are specific to these indicators. And when you get these type of momentum setups, then it takes a while for it to bleed off. And there's also some residual, it perpetuates the trend. Now I'm going to clean up these arrows just to show you. We're going into a little bit of an education here. But you've got three averages, the red line, and what you get here is you've heard me talk about this before if you're familiar with the channel, is we get, I just drew lines on top of, arrows on top of the moving averages. And I use moving averages versus trend lines, but I also, the PPMs, as I just was talking about, each one of these PPMs tell me about the internal movement and the probabilities of the moving average holding a value or if it's going to break. And it works both ways, whether it's declining or whether it's advancing. In this case, these are positive 1.23. There's literally less than, I'll show you something interesting on this chart. There's less than a 10% probability for the market to decline below the 10-period moving average with PPM1 at a positive 1.23. Remember, a 0.25 is a trend. At 0.25, it's a 60% probability to hold. At 1.23, it's almost guaranteed that it will hold. Okay, so let me take these off for just a second here. I want you to look at right where, so the fast average, which is the 10-day moving average, 126.38. The low today, 127 even. So we basically traded down to the 10-day moving average. And what we're likely to see then is the market grid start to slope down, just like it did in that previous situation I showed you. Some consolidation. We trade along the line of this 10-period moving average, and it's rising right now every day. It's rising basically, this is a rough number, basically $2 a day. So that number is 128 tomorrow. And 132 probably will fade a little bit more, be 131 something, and then 130. So we're looking at where we're trading right now is most likely pretty substantial support, and the move down to 127 today was an extreme, and is probably because we saw the blowout of the range on the market grid we talked about, where it took out RXT and it took out STX. This just tells you this was a climactic range type situation. Now you go into the second phase of this, which is a consolidation. So Apple probably won't make a new high, but there is something else that also is happening here that could be significant. So I'm just going to we're doing this analysis together. And so what I want you to see here is this. I'm going to take the grid off just so you can see the bars a little bit better. What we've got going here is very climactic in nature. We have a potential for a downward outside reversal bar at an all-time high. So that in itself, you can see a little cleaner. I know a lot of you folks like to use candlesticks. I'm not a fan. I'm old school, and I just like a bar chart, right? The bar chart formation tells me a lot. It was funny. Somebody was talking about something the other day. It was there was a doji on something, and one of the original guys to bring out the candlesticks to prominence way back in the 90s was an old workmate of mine, Steve Nissan. We worked at Merrill Lynch together, and but he actually wrote one of the very first books back in, must have been 1990. I think he can't, he wrote the book at that time, his first one anyway. But the bottom line is this type of action could be climactic if we close on the lower 60% of the range on Apple today. Then it sets up this. This is Bob's 3-day trade. Okay, I'm going to give you. I don't do a lot of this stuff, but I'm going to give you what I call my 3-day trade. And this is the only time I get a chance to do this stuff. I actually love these live streams. Is that when you get a reversal, outside reversal, you have to close. Today's value needs to be in the lower 60% of the range. And then here's the criteria for the next 3 days. Get your pens and paper out. This is going to be good stuff. So you get a lower close and a lower 60%. And then tomorrow, two things have to happen. We cannot make a new high. And we have to make a new low. And we have to close lower. So we need the next bar to have a lower low, closing lower, and it cannot make a new high. If we close higher tomorrow, trade off. So the way you would execute a trade like this, you'd wait till tomorrow, a higher opening, you'd be a seller of the higher opening, looking for that lower close and looking for that print below. Today we have 127. We'd look for that print under 127. We get that, we close lower, you stay for day two. Day two criteria is pretty simple. Once again, you can't take out the previous day's high. So on day two, the stop level is right above the previous day, day one's high. And the next day does not have to make a new low and does not have to close lower. It just can't take out that high. And so what that means is that the day that you put the trade on after the reversal, day one, that is going to be your stop point. And then what happens, day three, you have to see a lower low and a lower close from day two. And that will confirm the trade. And then you lower the stop to day two's high, just above it. And then on day four, now we're into day four. On day four, and this is just a trade. This is, and you can use these. Sometimes you can find a major reversal high trading this. And I typically, if you trade in multiple contracts or multiple shares or whatever, then you would on day four, if it takes out day three's low, you take your profit. That's the basic trade. You know, it's not about, oh, I caught the top and all that stuff. Maybe you did catch a top. Depending on the magnitude of this range of these things that happen, then that will tell you what type of trade you caught. So let's say it was huge range like today, and tomorrow's range, this thing collapses, it goes all the way down to 119.50. And then, you know, now you've set up something bigger and you're looking at the highs, and you can judge it that way. But I would still on day four take at least half of the profits. And if you want to hang on, you can use the previous day high as a stop and let it take you where it takes you. So that's a freebie for today. Okay. Sometimes this is you get me into this flow of consciousness. There's a lot of stuff that you can learn from trading the markets for 40 years. But this is a classic trade. I've been doing this trade forever and ever. So well, you wouldn't short. Somebody said, will you sell Apple? No, you sell Apple just as I described. If it closes in the lower, if it closes where it's at right now, you're in the lower 60% of the day. And if that happens, higher opening tomorrow, you sell on a higher opening, or you sell. Unfortunately, you may not have, you won't have the the market grid, but you want to sell on a higher opening, and it'd be nice to be selling S1 or R1 or an R2 on it, and then you would play it from there. Has to make a new low, has to close lower. It could be a day trade. Sometimes these trades, you start off thinking, okay, this is cool. I've got the setup. Here it is. I put the trade on, and then on day two, it opens higher. Yes, I sell. I'm selling the thing, and now I'm waiting. And by the end of the day, I find out it didn't meet the criteria. It didn't make a new low, and maybe it didn't. Well, if it doesn't make a new low, you exit the trade. It doesn't matter how it closes. You don't get optimistic and go, well, maybe it'll work tomorrow. It's just, one of the things that I've talked a lot about, and I'm a quant by trade. All the stuff on our Wave Tech tool, all of that stuff is about having a quantitative analysis and running baskets of stocks in a group, and that's how you're going to make money long term. You're not going to make money, just always trading. But this is a trade I'm describing. So if the criteria isn't met, you're out of the trade. So you even had, most likely, if it doesn't work, you have a small loss or maybe a small gain, depending on how it closed. You just didn't meet the criteria. So that would, but that 4 days, that fourth day, man, I've had some awesome trades off of that particular setup. It's a really good, you got 3 days. That same setup, by the way, you could do on an hourly graph. If you're trading intraday, you could see one of these reversal bars, and then the next hour you can take, that's a bar chart trade. It has nothing to do with being daily. Same thing happens on a weekly. So you get a big weekly reversal, same setup, second week, third week, fourth week. So all this, it's just a bar chart. That's why I use bar charts. I don't care about engulfing patterns and all this stuff. I know, I have to admit, candlesticks are certainly, I put them up here. They're certainly prettier to look at. There's no doubt. But, they just don't, they don't meet, I'm just so used to using this. You have to remember, when I started in 1979, we got for commodities, we got a thing called commodity perspective, and you got a drafting pen and pencil and a ruler, and you had to draw in each bar and make it. And if you're using trend lines in your analysis, there was no indicators. It was just a chart, right? So that's where I learned about Edwards and McGee and how they had everything wrong. So don't read that book. I see people talk about wedges and all the crazy, stupid stuff. You folks, especially younger folks, but there's just a lot of crud on the internet that are just talking about stuff that are right out of textbooks, and it gets hits. I've seen a couple of channels. These guys got a lot more subscribers than me, but I've only been doing this for 5 months, so I suspect maybe I'll catch some of them. But the bottom line is, that's just a great trade. I love that we ended up there. Okay. So somebody just asked, does a mirror? Absolutely. An upward reversal works the same way. Outside bar, close in the upper end of the range. Next day, buy a lower opening, got to make a new high, just invert the entire trade. Absolutely. But it's just a bar. I always call it I actually programmed this thing in to TradeStation once upon a time. I have no idea what happened to that, but I actually built it in. So it just looked outside bar, closing upper 60% of the range. And then it built in that criteria. Day 2 had to do all of those things, so it can be inverse. Absolutely. It's a great trade. I'm just telling you folks. You know what's nice about it is you usually find out on the day you put the trade on that your probabilities of being right are there. And when you see that, it's like, it's going to validate you the first day. You're going to back in the old days, we used to leave the trading floor and the markets didn't close. When you got a trade like this on, you left feeling good. You were I used to always say, if you want to see what kind of day somebody had back in the old days on the trading floor, all you had to do, like in the board of trade, there was a big long elevator that came down. All you had to just stand in front of the elevator and look at the faces. You just see a couple guys talking, laughing. They're going to the bar. Another guy just looking down at the steps just so he doesn't trip, because he's just like a deer in the headlights, just got his ass kicked and lost a whole bunch of money. You can see who won, who lost, just by watching that elevator. It was a fascinating watch sometimes, just to stand there and go, gee, I wonder what kind of, and the big days, up or down, are ugly days for floor traders. Everybody gets their asses kicked. It's not like everybody made money because it was a big day up. No, floor traders tend to fade a lot of stuff, but that's another time, another place. We'll talk old floor trading days. But the anyway, yeah, yeah. So anyway, all right, that was fun. You guys, you know, for Jay, we need to mark the timeline on this, and we need to pull that out. I did that pretty good, so I think we can put a video out on this 3-day trade on the channel. We'll try to rip that. Yeah, it does not matter what the market is. I would tell you one funny story. Okay, this is a funny story. I used to require, if you were going to be a customer of mine, you had to come to I did a seminar every third Saturday of the month. And we used to have these big events. And if you wanted to be a client, you had to come to the seminar. And anyway, I had this guy fly in. I was in the Bay Area at the time. Guy fly in from Memphis, Tennessee. I didn't care where you were, what part of the country you want to do business. Fly in, spend time. I want you to understand what I do. I'm always been a full disclosure kind of person when it comes to trading. And so anyway, this guy goes to this stuff, and he gets back to his office in Memphis. I told him to drop his wife off downtown in Union Square and give her a credit card and let her just spend money in San Francisco. And so anyway, he calls me up and he says, I started telling him, you know, here's the markets we're going to trade. And he looked at me, he said, son, or on the phone, he said that, son, I don't care if you trade chicken wire, just make me money. He didn't care. So the point is that trading's trading, and the world we live in now, you know, we're all very lucky, but you younger folks, man, if you figure this out, man, I'm telling you, you know, I spent my whole life doing this, and I'm jealous of a lot of things that I would like to have another 30 or 40 years to grow with this technology. Anyway, enough for old man talk. Anyway, so let's go on. Okay. All right. Wow, that felt good. That was fun telling you guys that. I got a bunch of those. Well, one of these days we'll get it together so we can just focus on trading, you know, not analysis. We'll do that. All right, back to work. Let's go back to Apple, and let's go to the monthly here and just take a look at what's going on here. I'm sorry, the weekly. And I'm going to put the grid back up. Do you guys remember anything I said about Apple? Hopefully. But let's put the grid back up. So this is the weekly grid on Apple. Couple things on the Apple chart. We'd have to take out last week's low, 123.05. Based on what I told you a minute ago on Apple, I don't see that happening from that standpoint. So I would expect that those numbers I talked about, that 120.28, that should hold. And I don't know, because of what I told you. I just realized there was a setup for that trade. And because of the moving average, may not work, but it won't cost much to play that trade. And you may be able to take some options, or maybe do some vertical put, or, you know, do something, maybe buy some puts, and maybe do there's a way to bracket this thing anyway. And this one of the things, probably a great trade, just putting on a butterfly or something up on this range. So I haven't seen them around, but Charles, if you're watching, that's probably what we should do, is set up a butterfly in this range. And we're looking at the market grid right now for Apple on a weekly basis, 116 to 132. We obviously spiked above it. 132.67, 116.95, and that was definitely, this is a big range. Most likely this is climactic. We're going to see a lot of sideways movement. And I did mention, I brought it up in last night's video. I said maybe this Tesla and Apple situation will end up to be, you know, like an intermediate top for those stocks, that they just blew out, and now they go into these high level consolidation ranges. So anyway, this is the range. Here's the market grid, so you can mark these numbers down and all that stuff. Okay. Yeah, gold's getting a little bit of bounce here. We're now, okay, we're going to flash back before we go to Tesla. We're going to go back. We're now 72.83 high. We're now printing. We're now printing all-time new highs again. Now we're printing 73. Here we are, RXT weekly, 35.75.62. I just said 20 minutes ago that we might get there. Here we are. There was only 9 handles. You know, this thing's just in a runaway. We're up 1.33%. Okay. All right, here we are at Tesla. I come back on screen. You know, I mentioned a couple videos ago, like somehow this split thing is supposed to be bullish for stocks. It actually is, maybe for the next year, but not immediately. Not only did they split the stock, but they're talking about raising $5 billion in new stock. So putting stock on top of stock. I mean, look at this range that we're seeing here. We're looking at, we've blown through, this is daily, we've blown through the bottom. We are maintaining, this is important to understand, this will illustrate, this is another teaching moment, we'll call it, right? This will illustrate, if we look at the range on Tesla, how it blew out here. The STX 435.58. The high 479, we're basically R1, and we are printing through, we printed through the STX. But the number I want you to pay attention to here is the 10-day moving average. We're going to draw this in, just another little teaching moment. So I'm in teaching mode today. I'm not sure where that came from, but we'll go with it. So a couple things. I talk about these PPMs. Over here, they're PPM1, 1.58 PPM1, less than 10% probability, usually to penetrate, but in this case, I would say for it to close under this level would be almost impossible today. We spiked down, mark these out, to 405. That average is 435.56. We're currently trading, last trade, 443.25. When I use this tool, it freezes the screen, so all the live quotes stop showing while I have this live. It freezes it. But anyway, what we're looking at here is look at PPM1. This is daily. First, second derivative, it's gone through. PPM2 is rolling over. PPM3 is already rolled over. You know, this last little run is finito, and I will go to the weekly chart. And I talked about this. I remember saying it somewhere, even in last week's live stream or one of my nightly videos. I usually don't, I try not to mention stocks because I just can't even go there on individual stocks on the daily videos. It's, you know, I guess if everybody super chatted me every time and I got paid, I don't even, I'm not soliciting that, don't get me wrong. I just think that we would get, it's just a lot of work to try to get into that. And just when I told you folks to give me stocks, the amount of stocks that you want me to cover. So it's very difficult. But this range, here's what we're setting up. Just like in Apple, we're going to get into this grid. I'm going to take all these arrows off for a second and draw some new ones. What this grid is going to do is it will start turning down just like it did over here. So we'll get this little downtrend. This is daily chart, so how far does it go? I'm not sure how far, but it's possible with these indicators, like I was just talking about, all three of them rolling over simultaneously. This is the end of a trend. Doesn't mean it, we're going to look, the important trend is the weekly or the intermediate. And once you get to that level, then you can start to evaluate things that are going on as far as bigger trends go and what the price movement is likely to be. This we know this thing is hugely volatile, and you know they're loading, as I was saying, they're loading this thing up. So they 5-for-1 split. There's 5 times as much stock on the street than there was a couple of days ago, right? People forget that. So there's a lot of stock, and I've always told everybody, if you get split stock, sell some of it. You know, you could on a 5-to-1 split, you could sell, you know, at least half, maybe more of the stock, and you still have a similar exposure, you know, and you take some money off the table. So there's nothing wrong with doing that stuff, and maybe a lot of folks are starting to think like that owned it ahead of time, and that's fine. But but when you start, then right after a stock split, the company is aggressive, and they go, okay, these people bought into this strategy. Let's face it, you know, you guys know I'm a huge Elon Musk fan. And if you haven't watched the Neuralink video that he put out last weekend, it's absolutely insane. Watch that thing. It's amazing. Yeah, it's amazing what they're working on doing with the human brain. But so, you know, I'm a fan, but they're also very aggressive. I mean, like, okay, we've got all the momentum going our way. So not only maybe people that have extra shares are selling, but the company's gonna raise a bunch of money here. Why wouldn't they? Let's raise it while it's here and just get a whole next tranche, and then that gets recycled and distributed, and then there's another round. And that's how this corporate finance at work. I've watched several videos with Elon Musk talking about venture capital strategies and things that he did, and the guy's obviously made a lot of good moves, and he's had his issues with these people as well. But this stock's getting loaded up, so we're just going to leave that. Let's go to the weekly and take a look at what that is going to bring in. So now when we look at the weekly, looking at the grid, the high so far 502, RXT weekly 517.18, and S1 425. Look at S2 405.43, low 405.12. So we've had virtually an RXT extreme and an S2. if we close below that 425 level, then that will set up a very broad trading range. And let me move this chart around here just so I can draw in a few more things here. I know we're spending a lot of time, but there's a lot of education. Yeah, thanks for the super chat. I really, I would, yeah, thank you. Thank you. I appreciate that. Yeah, Elaine, I want a Neuralink. I figure, what do I got to lose as old as I am? So it's, yeah, I definitely want one of those. Anyway, yeah, so we're looking at, this is a very interesting setup, but what's going to happen, we're starting to see the PPMs roll over. They're still crazy positive on intermediate. So this trend is not done, but we may have actually seen a price high for Tesla for the time being. It will be important if, like I said, if we close under that 425 level on Friday, then we've got the starts. Doesn't mean we won't trade back toward 500 or upper 400s again, but this is starting to set up some semblance of a potential top. Now, the last time we came up, we got this move right here. Let me draw this in. So this is one of the things I wanted to point out. We're just going to take a look at this, and I mentioned this in a video, is that I think this is the fifth wave up in Tesla, and we could actually do some math here, but this high and this low, typically what will happen is that this is wave one here, wave 2, 3, 4, and then 5. Typically what you'll get is that wave 1, I got a lot of arrows going here, that this first sequence from this low up to wherever you want to call this, we'll just call it here, that wave 5 will be similar in length. Without doing the math, they're pretty close. Wave 3 is right here, and then this is wave 4. So this could have completed, and actually there's one other thing. I'm going to go back on this entire wave count. We're going to back up a little bit. That's just of this last sequence. The bigger sequence, we're going to go out to monthly here real quick. Yeah, okay, this will make sense. Since there's a fair amount of history here, but the price action was so narrow for so long that it's kind of hard to evaluate. But this will still play into what I'm going to show you. I just wanted to see this chart. We're going to go back to the intermediate, the weekly. So the argument, what I just showed you was the breakdown of this final wave. So this is probably finished, but this most likely is a wave 3, and I'll show you what I'm talking about. So this was wave 1, and then we have what we'll call wave 2, and then we get this little 5-wave sequence of 3, and I'll show you on the next level chart. So one of the things with using WaveTech methodology is a combination of use of moving averages to predict and confirm Elliott wave sequences, and the PPMs that you see below also have characteristics in each one of the sequences. So it's a complete systematic approach to understanding wave movements, magnitudes, probabilities, all of that stuff. We did this math way back when probably a bunch of you weren't even on the planet yet. And what this does is it gives us some predictive capabilities to make some very I guess substantial projections. And that's why even going back to the S&P, just looking at where we're trading right now, I made those projections for the S&P back on April 30th. This is where I talked about these were new Fibonacci projections that came out. And everybody literally thought I was crazy and projecting new highs, and 35.15, 35.70, where we're trading right now, seemed absolutely stupid and crazy. And, what's wrong with the old guy? What's he doing over there? Well, these strategies, they're not just strategies. The math is all there, and the math has been highly developed. But what this is here is, I think I might be able to, yeah, I think I can do this and still keep the same thing on here. I'm going to change my color. So on the big scheme here, this is what we've got. The red bar is going to be the 3 waves within the bigger sequence. So the green line shows in this last sequence there were 5 waves up. To pull this sequence up, we'd have to go to the daily chart, and we could break down that sequence, confirming the 1-2 level. But this last leg up and this 5 waves up within wave 3. So the red lines are the next level sequence. The green line is the minor. We could take this to the next level. Actually, we can take it to a couple levels more, but we could go to the daily chart, and we could even take the dailies and take the time and effort to break them down into hourlies. But all that really matters when you're trading trends at the level of this is being able to do this. And so this is the entire analysis. Now what I'm going to show you is you'll see this pattern perfectly when I revert over to the monthly. Okay, so here now I'm going to draw in one more sequence, and then I'll make this will end up to be a long-term this will be a long-term thoughts on a longer-term thoughts on Tesla. So we'll stick with red. This is our wave 3. Maybe it's completed. We're going to just say that it was. And this, you see this massive market grid. What's going to happen here is this market grid will do something like this, and it will start to contract. And what will happen with Tesla, we will set up a wave 4. So if you recall, this was wave 1 on it. We'll call this a grand supercycle level. This is wave 3. Now Tesla at some stage here goes into a massive consolidation. They raised $5 billion. They split the stock 5 for 1. There's stock everywhere. Okay. There used to be in the old days, we used to talk about there's stock ahead. Well, there's so much stock ahead, it's ridiculous on this particular company. So this pattern is going to set up here, and then ultimately you get a move up. You get a wave 5. How deep do I want to go? Do you folks want me to keep on this trail I'm on? So a couple things would happen. I just see, yeah, it is, but everything's a bubble in these days, right? Parabolic bubble. And this this could just be a spike and this thing comes to an end, but it would appear that Tesla is still going to keep making cars and they're still going to be growing and making batteries and all kinds of stuff. Okay. All right. Well, I'll continue on. So the long term, if, you know, man, I know I got really deep. We're into the second stock. I get it. Okay. But this is just, I feel like this is very educational. It feels good. So, but what there's another theory, and I'm just going to talk about it for a minute, is that if any of you have studied Elliott wave, there's one of the most significant, important rules there is, period. And this is not my opinion. It's in Elliott's book, and you know, one that Prechter wrote back in 1980 or something. But it's called the rule of alternation, and the rule of alternation is actually states that if the first sequence, so you have 5-wave sequence, waves 2 and 4 are corrective phases. So if wave 2 is simple, otherwise ABC, right? If wave 2 is simple, so I'm going to come on screen so I can wave my arms at you folks. So if wave 2 is simple, so you have a simple ABC, and then what that says that wave 4, the next corrective phase, will be complex, meaning that it will consolidate much more than wave 2 did. So we could argue that wave 2 was right now from this peak 1, 2, 3 months long, okay, on this particular sequence. So what that means is it'll probably be 6 months long or maybe a year long, where we get ABCX. I'm getting way out of line if you don't know Elliott, but there's a 3-wave pattern, and then there's what's called an X wave, an interrupt, and then another 3-wave pattern. If we did that, that would carry us at least out maybe, I would say 9, 12 months, so a year out. So what happens on a company like Tesla that happens with? So what happens, they're going to sell stock, they split 5 for 1. That stock needs to be absorbed and redistributed through a large number of people. And that's what a correction is. This is a distribution pattern. So this stock is all set for a distribution of capital, raising new capital, distribution of capital, and then with that new capital, they've got to prove their point during this next 12, 18, maybe as long as 2 years. The correction pattern itself shouldn't take that long, but we're looking at least 8 to 12 bars minimum in a sequence like this. And we'll find out over time when we're right. I'm sure I'll hear from all of you, but this is just the concept that if it was 3 months of wave 2, this one's going to be a lot more. If ABC took 3 months, then we're going to have 3 months of an ABC, a month, month and a half of an X wave, and then another ABC. So we're looking at 7, 8 minimum months once a high is established. And we're going to know probably this month whether this was a peak value in this stock. So the next thing that would happen is that wherever the low of this is, and by the way, we're probably close already to stabilizing and printing where the lower end of the pattern is going to be here at this. Let's look at this 420, 400 level, maybe 380, 359 is SDX. This is probably close to the bottom. So for those of you who love trading Tesla, this is going to be awesome, because now you're going to be able to trade Tesla on both sides of the market without the fear of getting your head chopped off on the short side when we start to set up these ranges on the market grid on a weekly and monthly and all this stuff that's going to happen. So this is like a huge opportunity. You know, the stock just doesn't have to keep running. Now you get a trading opportunity. You had an investment opportunity. Now it's a trading opportunity. And later, 8, 12 months from now, you probably get another investment opportunity, because wave 5 is typically going to be similar to the length of wave 1. All right, we're gonna do the math. I'm way too deep here. There's no escape. So the high low is 193, 150. It's not really that exciting from here. But probably we're looking at somewhere between 150 to 200 points from that low. So that would just put wave 5 into the 600 handle here, up toward a little bit more than what the grid shows right now. But we'll evaluate that later. But this consolidation phase is likely to continue to unfold, especially if this month of September establishes itself as a high. So we do these live streams every week, so we're going to be able to continue this dialogue that we're having right now and take a look at this. But certainly, if you own this thing on the way up, you know, they're like I said, I'm repeating myself. A friend of mine said, "You already sunk your putt." I get it. I want to sink it one more time. Is that this stock has actually seen, you've got the 5-for-1 split, plus they're going to raise a bunch of money. They're going to load it up and take advantage of all the euphoria around the company. From a corporate viewpoint, if you're sitting in the boardroom of Tesla, you're like, this is an amazing moment in time for Tesla as a company. And if they do the right things with the capital and things that they're going to bring in, they will be able to push this thing out to the next level. All right. Man, that was a deep dive into Tesla. So that's probably another video they crop out. I think that was a good one. So, okay. I've got a list here I'll go through. Let's take a look at something here. Yeah, let's talk about leadership for a second, and then I will talk about this. But this spread still looks to me like it's bottoming. So I think what's likely to happen, I've been talking, this is the IJR, or the small cap ETF versus the NASDAQ. And I think the leadership will change. I think NASDAQ, maybe when we went through Apple, talking about a consolidation of Apple, high level consolidation. If Apple stays in an upper end range, it's not going to go down. I know the iPhone 12 is coming out. You don't have to tell me about that. iPhone right here. I have a Mac over here. So yeah, so I understand Apple. And you know, so, but what I'm talking about here is a consolidation, high-end consolidation range. And if that consolidates, and a lot of the secondary stocks and stocks are coming forward. Thanks, Andre. Really appreciate it, man. That is, that will move this market to the next level. You know, if you recall, when I went through the S&P, if you're just joining the show here, just go back and watch the replay. First hour, I went through a lot of details. I think probably a half hour in, I went through the technical details on the index, and you can equate those numbers to SPY if that's what you want to know. They're basically similar values, but that leadership change has to continue to switch for the markets to continue this rally. And you know, I just got to believe this thing's going to keep going for a while. You know, it's the old story. Market um, goes in a direction to hurt the most people. Sure looks like it's doing it. You know, there's you go on CNBC, Market Watch, go on some of these typical retail channels to read news stories, and it's just one guy after another telling you how the top's coming and all this stuff. So it's pretty classic. And a lot of those stories come out like that because the producers of those channels are that they have a bias and they think that's going to get them clicks and all that kind of stuff. And that's what I was saying earlier when I my last night's video, I said no high yet, and the views on the video were down probably 20%. And if I would have said the high is in, I'd probably, you know, get 50,000 views on the video. But the bottom line is that negative, everybody wants that negative narrative because the stock's going up. So the market's been going up. But this chart I've got on the screen here for you is important to understand from the standpoint of that rotation. And while it was showing some real promise a couple of weeks ago, it's faded back in. This pattern is a bottoming pattern, and it's a very broad pattern in volatility, which also tells me that they're structuring out a low, and it doesn't have to just be the small caps that lead. In the S&P itself, it's mostly a mid-large cap index. All you have to see is some secondary rotation. And back in 2000, when the dot-com bust happened, we have in the wave tech process, we actually have every stock, all 500 stocks, in a portfolio, and we update the constituents all the time. And back in 2000, when the market went down, we were actually able to return positive returns trading all of the 500 S&P stocks, because we rotated out of the top end of the index, just like we have now, where we had literally 50 stocks were, I think, 30% of the index back in those days. And we rotate out of those and we bought the secondary stocks, which rotated in. We're actually able to show like 11% gain that year when the index was down, just by playing some dynamics within the index. And you have to also understand that all of these, IJRs, the Russells, all of those indexes are cap weighted indexes. So they have a higher capitalization echelon as well that is going to cause that. So some of those the opportunities, not in a high visibility, but in the secondary stocks, that's where you're going to find the absolute, you know, most gains for your buck, not necessarily in these highly visible stocks. That's not where the money's at. Doesn't appear. There's not the low-hanging fruit, but you got to climb up the tree a little more to get this stuff. So, okay. So I'm going to roll through a bunch of stocks, starting with stuff that I wrote down. And I'll do daily, weekly on these things, and I'm just gonna roll through. Yeah, by the way, S&P printing 35.85 now. Okay, so the CrowdStake Holdings, somebody put the symbol out there, down 299. We got a daily chart. We printed very similar to some of these stocks where we've seen RXT and the STX coming on both ends. So I didn't. So this is a big range. These type of actions sets up most likely a large consolidation range. We'll go into the weekly. Yeah, this thing is just, you know, through the weekly grid. Yeah, it's crazy. I don't know much about these stocks. Not sure what these folks do, but they're doing something right. And we've gotten to the grid. So this is the weekly. I suspect there's even less. There's not a lot of monthly. Yeah. Monthly grid, though, does show 150.46 high, 53.10 high. Yeah, I would be, if I own this, and if you owned it, congratulations. I would definitely be looking to take some profits and put that one in the bank for sure. Next stock. I wrote down wrong, so let's go to Zoom. So Zoom had the huge gap higher. It's interesting because the previous day it closed above the grid. It closed the second day under the grid. Now we're seeing some backfilling. We're starting to see some profit taking. Impossible read. If you own this thing, you know, this is tough. I guess if you owned it, it's not that tough, but you probably want to put this one in the bank and find something new to play with. I'm just going to put on here. Yeah, I just put a model on here. The other thing you can do, if who asked the question, or if you are a WaveTech user, I would just use this signal as an exit or take partial profits up here. We put a signal out at 277 on this stock. That's where we bought this. And, you know, you're going to grind this thing out, and these moving averages and everything's going to catch up pretty quick. It's going to take about 5 to 8 sessions to get there from that standpoint. I don't know if there's anything on the weekly. I'm just going to, yeah, or we already looked at that. So let's go to next stock. We've only got about 12 minutes, so we're going to do Intel. I've talked about this stock a lot. It finally did get, I'm glad I left the models up here. It did get a buy over here, so you WaveTechers know this. You've got a buy at 49.21. It's 52, up 3.5%. It's breaking above its grid, but it's also breaking above 40-day moving average. PPMs are on fire here. So I remember, we'll look at the weekly graph, but I remember talking about this, and this was a stock that I thought had reached its bottom. There was just nothing. Yeah, it was just hovering right under the 200-week moving average. And now it's moved up to the 10-week moving average, which is similar to the 40-day moving average. Another point in time. But PPM1 has sliced through, but there is a negative 0.93. So this stock is likely to stall right around these areas and probably work back its way back into the grid somewhere around 49.5 or so. So, but from a longer term hold, it still hasn't signaled an intermediate buy yet, but it does have the short term buy on, so you can use that buy signal if you're using WaveTech. If you're not using WaveTech, sign up. And one would say, and if you wanted to sign up, this is how you do it. I'm going to do a brief advertisement. You just go to kendallreport.com/WaveTech. There's a video there. You can sign up and use this product. We do weekly training, which we did yesterday, and this is where you get this. So there's a lot here. Everything it tells you, it covers over 16,000 symbols. You can manage and build your own basic private mutual funds. There's a lot of cool stuff in here. So and there's training videos, all kinds of stuff on our website. Okay, advertisement done. As we go, the other thing I want to look at since we're on this, let's go to AMD. And AMD has been a huge leader, and we've got AMD is much different. We did get a buy on intermediate basis, but if we go back to a daily, you'll see we got a daily buy at $57, and now we're printing up here at this high level. But this is exactly, if you remember earlier when I was talking about, this is the momentum proceeds price. Now what we need to do is the zero lines over here is just keep these PPMs positive now, and this trend will continue to inch higher. It may be getting fairly robust and maybe close to an end as we're looking at the top end of the grid on a weekly basis, 92.13, RXT 94.28. Next stock I'm rolling here, Netflix. Netflix, this is a weekly buy several weeks ago, way back on 417. Still long, trading at its extreme, RXT 562, high 557. So trading between R3, RXT weekly. PPMs all look good. Looks like there's the trend is well in place for higher prices. Let's just do one last thing. Let's see if there's any price objectives. There is not. It's already exceeded all the Fibonacci projections here. So let's go to daily real quick. Yeah, so some of these old projections could still be good. 610, 699 is possible. Maybe 610 is probably a good number. We got a daily buy over here at 501 recently, so you're good there. Let's go to American Express, just trading below its 200-day moving average. Got a buy recently at the 101.53 level. PPMs all accelerating, plus 0.78, 55, and 0.30, so that's good. Looking at weekly. Yeah, weekly, I remember talking about this last week. 129, 138 upward projections here. So there's some pretty good numbers up above this market, still looking good. And, you know, talking about the capacity trade, talking about looking at retail and other stuff, this tells us that things are likely to continue to improve. And, you know, humans are going to be humans, and they're going to take risk, and, you know, they're trying to set us up for, you know, this fall season of COVID. No one knows what it really is about, or if it ever was. And but the bottom line is there's some pretty good objectives here, and the only way that an American Express is coming back is if there's something a little bit more there. BA, man, I talked about this the other day. This stock, let me go to a daily. You know, I put this in a Buffett strategy. Just a second here. I want to. I'm just trying to. Yeah, I put this, I just brought up WaveTech for a second here, and I put this in this Buffett strategy, And looking at this is the only is one of the big losers in the airline portfolio that we're running right now, and that's minus 0.83. And of course, American, which I believe they got hammered again today. They announced like 6,000 layoffs, but I think ultimately that's going to be a good sign that they're leaning out the company. And the problem, and I talked about on going back to Boeing, is who needs to buy airplanes when they're all parked in the fields? So I don't know how these folks are going to be able to sell anything. The capacity of airplanes have got to be satisfied. Maybe they'll be able to sell some new cool airplane, but you know, this company, I can't figure this one out. Let's put it that way. Yeah, somebody asked for BTI, British American Tobacco. Do have a buy on it at $33.99, last 34 and change. Going to weekly, yeah, below the 200-week moving average. No real trends there, although there is some upward potential up to the 39.43 level, maybe. That would be a huge move. Momentum isn't really telling us that that's very valid here at all. DOCU is through the roof, and here's another one of those things that this is a weekly that this is no humans don't have to have contact to do deals. So that is what this one's all about. Quite a bit of divergence, but it doesn't mean much. Maybe if we go to a monthly, we'll pick out something here. Yeah, so it's even exceeded the monthly grid here. The high-end monthly grid was 268, and we're 290. So we printed through that. May end up putting a peak in here, and once again, these type of stocks, if you own them, you know, take the money and run. You know, do they just keep going vertical? Certainly positive, but to me, it looks like a lot of these stocks are getting frothy, and this is probably wave 3, set up a wave 4, similar to the Tesla pattern that we talked about earlier. Now we're 3 minutes from the close, so let's take just a break, and I'll do a couple more stocks before I go away. So we pulled off let's take a watch the close on the futures here. I'm just looking at the chat line while we're watching this. Yeah, I always want to go to Edinburgh. Sounds like it'd be cool. Maybe we'll all travel again someday. Yeah, I see somebody talking about the Apple. There's a pretty good coverage of Apple. We will have this video chopped up once it gets rendered. I think it takes about an hour because these are 2.5 long before they'll show up on YouTube, but we will time tag them on different things so you can go through the bottom of the line and get things together. Pretty sure we've got most of this stuff done. Yeah, we'll watch this close. We only got we're in the final minute here. And one of the things I always look for is the liquidity. You see, start to get some movement, 400 by 300 roughly. So no big liquidation or anything. We're up 53 handles, up 1.5 on the futures. And Yeah, it's funny. I think 2 nights ago we had some weakness in the futures. We traded 34.84 low, and here we are 100 handles higher 3 days later. There's some really good selling come in on the close. That was it. Yeah, that was some decent selling coming in. So a little bit of liquidation. Looks like a lot of traders are just taking some profits. And remember, we've got the claims coming out in the morning, continuing claims. Those are going to be big numbers if the ADP numbers are anything to start to look at. I've talked about this a lot on the I've talked a lot about this on the channel that, the next 3 days, today starting, was going to be all about employment stats and all kinds of metrics. So tomorrow we'll have the continuing claims and the new claims out. And there's a couple other reports coming out. I don't remember what they are. I don't think they're real material of any sort. There might be. I'll cover that in tonight's video. And we've got about almost 500 folks watching right now. So if you enjoyed this content today, you like my free trading lesson and the deep dive on Tesla, go ahead and smash the like button. That'd be greatly appreciated. Let the YouTube folks know you enjoy this. And yeah, so I'll do a couple more stocks and then we'll call it quits. I've got kind of a hard stop today, so I need to be done here in the next 10 minutes. So we'll talk about that stuff. But I just want to thank everybody. These things are way fun. I know I got into some, actually, I think some very interesting, the 3-day trade setup. Like I said, we'll rip that thing out because I felt like that just flowed out very nicely. We can take and download that video and pull that out. There was a couple snippets, probably a deep dive on Tesla is probably a video we can, with a very little effort, actually put it out on the channel. I did some, if I must say so, I did some good work today. And no, I appreciate it because it's an inspiration. I talked to you folks about this last week. What this really does, it gives me the opportunity to go deep into a lot of stuff that I don't know. And I get, I have a sheet of paper here just full of notes from today of things that I discovered while we were working together and doing real-time analysis. And it's interesting to do that stuff because it's a flow of consciousness. You even know this stuff or you don't. I live and breathe all this stuff, and especially my work. And that's why you don't see me looking at, MACD and RSI and all that stuff. They mean nothing to me. I operate in a microcosm, or I always call it the fishbowl. Thanks, Matt Adams, for the super chat. Appreciate it. I really enjoy these things. So we do a couple live streams every week. One's a training for the WaveTech folks. And soon there might be 3 because when we roll out the portfolio expert, it's going to demand a lot of time as well. And we're hoping that a lot of WaveTech people will move over to that platform from that standpoint, just because it's going to be next level stuff. And we're excited about that. And I guess I will pick, I think if I dig into anything else, it's going to go too long. I'm not going to be able to do it. I'm about 6 minutes from this hard stop that I've got to do. But I appreciate it. I see a lot of folks that always show up every week. I appreciate all your support and all the things. And we definitely got a number of super chats today. Appreciate that as well. And soon, one thing I should have said probably at the beginning, if you're still watching, there's just under 500 people watching right now. But if you're watching, let me put this up on the screen here, because if you follow me on Twitter you watch the channel and you love these market grid numbers, we're going to be sending a survey out, and I'm not sure exactly what the format's going to be, but we're going to want to know what symbols you would like me to put out on a regular basis. We're going to incorporate it into a delivery process with the WaveTech tool, and we're going to put a lot of market grids out there. So when, like the setup on the Apple trade that we did today, or Tesla, or but we're going to solicit from you what stocks you folks like to see. But we may do it that way. We may also pick, 50 stocks and everybody vote on those stocks. So we're going to put something out. But if you're going to do that and you want to be part of that, right? You want to go to you'll want to go to this site here, you want to go to you'll want to go just to the kendallreport.com, and you want to sign up for exclusive access if you'd like to be part of that survey. And when we roll this product out, and it's not going to take long to finish from here, but I definitely need to do it. Thank Elwin, appreciate it. Yeah, so you want to sign up here. You'll get an email, a survey, some kind of questionnaire, and so that we know exactly what symbols, things. The basic plan is probably somewhere between 5 and 10 indexes, some ETFs. These are for market grid numbers, and then a list of stocks. And once we get this thing ready, we'll get exactly the numbers for each area, and that'll be on the questionnaire. But this is the place to go to sign up to get that information. So you just fill it in, and you can go from there, and that will get you signed up. So once again, appreciate everybody participating, all the super chats. Thank you a lot. It's greatly appreciated. And the best way to support us is to sign up for WaveTech, because we're going to do a lot of that stuff. So be patient with this. There's a lot of information, a lot of trades coming out, ability to build your own your own portfolios, all that stuff. I just put it up on the screen while I'm talking about it. So you can build not just portfolios, but we call it personal funds. So you can build your own personal mutual fund. And we're working on automation so you can get these ideas right into your broker dealer. There's some other stuff. I'm talking to a couple potential partners right now. So we're greatly appreciative of all the support, everything that everybody's done. And we are also working on we're going to be bringing out a Facebook environment so that we can actually put some other types of content and stuff out and build a better, a better way to monitor and to distribute information out on Facebook as well. And then ultimately we'll be looking for moderators and other people that are hanging around our community to help us build this thing out. We've had a lot of interest in it. Really, really appreciate everything that you guys are appreciate. It's been really cool getting to meet and doing a retail product. I have to tell you, it's been very satisfying. So enough for the gushy stuff. Thank you so much. Video tonight, as always, and tomorrow night, and then long weekend for us here in the U.S. And we'll I guess video will probably be on Monday night, the next month after Thursday night. Friday morning's video will be on. We'll have the long weekend ahead. So anyway, thanks for watching, folks. Have a great day.